Oh, right. Let's see if this is going to work for me or not. And let me double check that I'm actually live. Hey, that looks like me on that screen over there. Okay, cool. Good afternoon, everyone. Got kind of a lot I'm juggling here, so I'm going to try and experiment a little, making it super fancy. I'm actually live in two places at the same time right now. It's kind of cool. Putting this on our BB YouTube channel as well as the channel for MoneyNet. Looking at SPY, they don't call me the Spy Whisperer for nothing over there at the BB. That's kind of been my secret nickname on the Discord server anyway. Effectively, it's one of my prime focuses for all my day trading and swing trading intents and purposes. As you can also see on my grid here, I've got Intel I'm watching. That's been a great trade. As Steven said the other day, it's been the dog of the Dow, and it's starting to actually shape up to be a decent trade. It blew through that $30 pivot, and I'm kind of looking at the daily chart going, well, we got the potential to make a nice 2-for-1 after this pullback, and this is kind of a common thing. You'll get a nice 1-for-1 measured move, a pullback to the previous resistance level of the first move, accumulate, and then resume the trend. Sometimes this wedge can do that. Kind of keeping a close eye on that. If this, I can trade it to here. 33.70 is a good target for it. $34 would be nice. We could say 36 is a great bull target for 50% retracement of the big old weekly channel that I've been following. And my charts look messy, but dude, they work. So effectively, I'm going to see how this plays out. I've got just a long call out here, June 6th expiration. I got cheap, dude. $36 strike. Paid nothing for it. I was able to convert that into a 100% return on that spike to 33.70. Well, now I've broken that down. I bought it back at the base, and now I'm working on this guy here. I was able to lock in it again. So I can swing trade a short leg against a long leg. It's kind of a neat trick. I'm still in the position. Very, very negative cost basis. Can't lose. So effectively, I went ahead and captured that again. Sold a strike against it, just the next strike up, that 37.50 or whatever the heck it was. And I can roll with that for as long as I need to. Wasn't so lucky on my Tesla debit spreads that I have. I was looking to convert that strategy as well. It just didn't quite have enough profit to be appealing to go and convert that to a butterfly just yet. Same expiration, June 16th. I'm long, way out of the money, of course. I've got the, I think it's like the 240, 245 strike. I can't remember. What am I looking at? Way out there. Paid like 3 cents for that. Not tripping. So anyway, if that becomes highly profitable to convert that to a butterfly, I will, but I've still got plenty of time on it. I've got a nice measured move on it. As I put in the chat earlier today, Tesla's got a chance at making a mythical 3-for-1, which does happen. They're pretty rare, but it does happen. We've got the 1-for-1, very nice. 2-for-1, done. 3-for-1 puts us right up against previous resistance, so that can definitely come into play here. And again, just another giant descending channel. If we come out of this, we've got a chance at hitting 280, folks, maybe even 290. And that's just retracing this big channel here. It's kind of an obvious one. As you may know, I've talked about it millions of times already. I had a 207 target on this guy out of this hole, and that paid really well for me. Kind of interesting to see a lot of analysts throwing shade at Tesla, and I'm like feeling like the only guy who's bullish on it. Well, I just trade the chart in front of me. That's just kind of how it works, as Creed would say. As far as SPY goes, let's get back into SPY. I'm going to go full screen on SPY here, and we're going to get into some nitty-gritty stuff. And then we'll walk through a few things that, analysts have been kind of talking about, so I'll get into that as well. SPY, why did I get my drawing tool out? Gosh. I love my 5-second chart, but let's go a little further out here. This is a mess, right? You've got this channel coming out of this little diamond pattern I drew on a 2-hour chart. You can kind of see it on the weekly if you zoom way, way in. There it is. Oh, I got to convert these to regular candles. There we go. A little unprepared this morning. So looking at the rising channel out of this, we kind of spiked the angular resistance this morning. That's why we kind of flipped it into bear mode after that push. And I'm going to go into a little bit longer range details here. We've got a pretty nice setup here. We've basically made more or less a 1-for-1 out of this hole, right? So we're kind of approaching the upper side of that channel anyway. We can pivot for short-term pullbacks. We might be even bearish short-term. Once we cross this threshold, and I think this is going to be our golden goose here as far as SPY goes, if we're going to come out of this with an extension out of a cup and handle setup that's taken forever to form, this is going to be our threshold, right around that 428 to 430 range. And if we can break that, sure, we can start heading for cup lines. We got a wall up here to like 446. We've got the upper range here about 460. My gosh, that's way outlandish, but dude, anything's possible. Just trade a chart in front of you. It doesn't lie. Got to cross this threshold line though first to get there. This is kind of what I would call a giant double bottom in most cases. It's also a cup and handle, however you want to look at it, long term or long term. I always point this out as being your resistance, or your first high in a double bottom is going to be your R1, resistance 1. Target 1 is going to be everything in play previous to that on the descending trend. So you look at an extension target. Once we break R1, we got 430 in the short term. We've got 437 and 446, and therefore just replay all these candles. It's kind of easy to spot those. These can even become liquidity zones where you would put a box on them and kind of play through them. Let's drill down a little bit. So one thing to know about the diamond pattern when it's reversed or when it's seen as a reversal of a trend, this is the bull trend. When you get these as a topping pattern, sometimes they will break out and run exactly to a key resistance zone and then rip a face off in the opposite direction, right? So this is kind of a common thing. I call this the fake out of the diamond. So sometimes you'll get a pullback that will exceed the regression channel on the output side of the bull channel that comes off the diamond here. And if we break this, we can certainly become bears again and start riding a downward trend. We may even go so far as to say we could repeat this whole mess right here. My gosh. I'd hate to see SPY at 380 again, but like I said, I'm going to trade the chart in front of me. I'll take it as it comes. And I know these areas pretty well. I've been watching them for a long time. Preceding year up to first quarter, as I've been also talking about, this diamond pattern has been very common to being a precursor to extreme volatility, and up until the first quarter, it's been a predecessor to FOMC meetings. It's been very great to use to define the range of the possible outcome of both bullish and bearish positions on FOMC stuff. As you may know, I've been using that to scalp the living crap out of futures and do very well with FOMC meetings. To a point, this FOMC meeting that happened in the second quarter here kind of came into about the middle of our diamond. And it started to compress range thereafter. I'm like, well, that's funny. This, up until now, it's been preceding FOMC. Well, what's bigger on the table? The debt ceiling. That's what we're looking at here, guys. This is preceding the volatility that will come from the debt ceiling announcement, whether they reach a negotiating point and go ahead and lift that ceiling, which the consensus is they probably will, just to keep the government open and operating and make sure no one is left out and twisting in the wind, so to speak. Kind of look at that with a possibility of now you've got a House Speaker in place who's very, very stubborn in this situation, and not to get political, but there could be quite a battle here, and things can go the other way as well. That's all laid out in this diamond pattern. We've got extremes here. You got this channel here and this channel here, and that can become an angular support. We could trend this entire channel and rip it all the way down, repeat all this price action. That's very much in the cards for if things go that way. So like I said about the diamond pattern, it just precedes volatility, and usually it'll define a range almost methodically. I have yet to see this thing fail. It's been glorious for a year and a quarter straight, so I'll stick with it for now. I'll also know that when you start to take specific patterns for granted, especially in the indexes and the ETFs, they tend to fade on you. So like you get used to trading it, you get complacent in trading it, it becomes very easy, and then all of a sudden they disappear. Well, then usually you'll see a new pattern emerge, and kind of look left here. Once we had that really long QE session that just pumped the living tar out of the market this whole time, we don't see too many diamonds in here, do we? So effectively, we would have measured moves repeating over and over and over and over again. And that's why I'm always watching measured moves on the short term, because good practice makes for good results. And I've been able to trade measured moves over and over and over again, regardless of the bigger pattern. So I'll stick to the short term until I see something that presents itself in the long term. Let me drill this down to the 5-minute chart here and show you what we have going on. And then I'll stand out and show you how I came up with this. So effectively, we have this range that was built over here. That was leg 1 for our measured move. Yesterday, a lot of people I know were anticipating a bearish reversal in this whole thing. And I was starting to talk about, sometimes when you're waiting for a bearish reversal and you end up waiting all day, you miss a beautiful trend day. And I was a little bit optimistic yesterday. I was, in fact, bullish yesterday, and I was able to clock that entire range on the closing, and I was able to capture this opening range breakout on the open. Did very, very well with that. It's kind of a thing. You can't allow yourself to be biased in the market at any time, because it will absolutely prove you wrong, and it's very efficient at doing so. It's a react, don't predict situation. I know someone who keeps that as a note right in the middle of their chart. That's sticky to the chart on any time frame they look at. It's always there. Very smart thing to do. So effectively, we got our bullish 1-for-1. We opened up right at the Globex high, was perfectly at the top of that box. I printed this yesterday. I did not print this in the after hours last night. There it is. Methodically laid out our measured move. We couldn't break the 420.80 zone, and sure enough, we became bears. Now we're seeing a double bottom after a mid-channel or a mid-box break here of a measured move. We could bounce around here, but I think we've got some unfinished business to possibly go down a little lower. However, as Al Brooks would put things, let's draw a box here. Whenever you see 5-minute candles with a wick, you think of them like a failed breakout. And that is going to be a zone to pay attention to. That's going to be a liquidity zone. This will be a short-term demand zone. So we'll see what happens. If we can break this, we can finish this business, hit the bottom of this 1-for-1, and come back for retracement, as I call it, and maybe resume a bull trend. Things could also go the other way and start climbing back down the ladder. So certainly keep an eye on today. I expect, just not to be biased, but I expect we should finish this business into the 416.50 area and then see what happens from there. So I'm still running a bearish position. I was actually able to open up a condor in this mess this morning very efficiently. I paid 3 cents a side on 0 days. Call sides are obviously going to be useless. The put side, I was able to lock in 125%, as a matter of fact, by converting the put side spread into a condor right around that second wick into this guy here. So, or not convert that side of the condor into a butterfly by locking it in with a credit spread. So can't lose. And if my credit spread, which is the body is at 414, God forbid we break that zone, we go to 414. That has a chance to make almost max profit if I can capture that by the end of the day. That'd be really cool. Out of the money enough to be in the pain zone, but cheap enough and with spreads to help mitigate the rapid time decay on 0 days. It's been a great strategy. I've been able to walk that around really well. Just be aware if you're doing this with Robinhood, be very careful of that auto liquidation time at 3:30 on a 0 day. They've been known to do this, and I had it happen the other week. They closed the debit spread side of a butterfly and left the credit spread side open, exposing me to the risk of the width of the spread, less the premium I received. That's very dangerous, and if you're not paying attention, that can really, really screw you. So I made sure and manually close that and immediately put out a ticket for support on that, and well, let's just say their response to that was lackluster, and their response basically blew it off as if it was just no big deal. But I got the wheels turning here. I'm like, man, this is bigger than you know. And I'll go into details on this because I can make this public information. Their response from their options experts was less than desirable. I mean, they were saying things that a rookie would say, and it's very frightening. I don't want to be flamed for defamation of character here, but when I have an options expert telling me that options can only be exercised up to 8:30 p.m. on a 0 day, and I know better because I've exercised options myself at like 11:50 at night on 0 day. Just saying, when things pop up like that, it's a giant red flag to me, and I'm a little leery about that. So be careful if you're using Robinhood to trade that strategy I've been kind of teaching people how to do. The whole purpose of that strategy is to help build people into understanding that you can, in fact, day trade with an account that's under $25,000. By instead of closing the positions, you can actually convert them. However, if they auto liquidate you, you're going to end up day trading. So be aware of that as well. All right, so back to the basics on SPY here. Let me go to a 2-hour chart and I'll drill back down into what we see with our measured move. It's pretty simple. This is the angular resistance here of that diamond pattern to the left, and we just about hit it. This is definitely lined up like that fake out that I talk about, where it gives you a fake breakout and then rips a face off in the other way. Very ominous of that. I've witnessed and experienced that several times, where it doesn't quite make it to that angular resistance, but it blows through the previous high, and it definitely blew through the previous high. That's here. So effectively, when you get into this zone, I'm almost certain that it's at least going to pull back to the middle of this measured move, and if it gets loose, man, it's got lots of downside. So not to sound like a pessimist, but be aware of that. All right, give me a second here. I'm going to drill into a couple things on equities and look at kind of what mainstream's talking about. And let me get that screen up real quick, and then I'll switch to it. I love doing this. I'll flip right to CNBC and pop this up just because I can. And hell, if it's their public information, it can be mine too. Pardon if my mouse disappears behind the screen here. It's kind of weird. They got pop-up ads that are just whatever. Of course, they're talking about all the big caps. You got Microsoft, Amazon, Google, blah, 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 blah. Must we accept that there's a bubble in AMD, NVIDIA, Meta? It kind of can be. Let's start with, I'll look at Meta. I like this one. I've been playing a lot of trades on a lot of these big caps, but I've kind of avoided Meta because it's just kind of crunchy to me. Yeah, I know people have made good on it. This descending channel I pointed out a few weeks ago played out freaking beautifully. We're at the middle of that channel. We're in a control area. This is critical here. So if this thing cannot be broken, I would almost certainly expect that bubble to pop right there. However, don't rule out that there's a massive gap candle here, and surely that can be retraced in a very short time because it happened in a very short time. If we get above this level, this is the 248.35, right on that key level. If we start to smoke that thing, dude, we could certainly run up to the top of that candle and say, okay, $300.80, it's on the board. I'm not saying take a trade on it yet, but certainly, put a program together where you can make a trade plan. If this, I'm going to do that. That's your program. That's your trade plan. You start breaking this and start building momentum here, you could certainly get long and ride that. However, if it rejects here, sure, short it. Where's the next target for shorting? Well, there's two of them. One of them here is about 218. Second one, you just go and find the next control bar in there and print a horizontal line. Pretty simple. About 196.45 is possible. I'm going to watch this, though, because this is one heck of a trend here. It's got lots of strength in it. I'm neutral until it breaks one way or the other. Let's just say that. What was the next thing they spoke of here? AMD. Same scenario. We've done this, been there, done that. There's your channel down. 50% right in this guy here. I've had that $100 target on here. I took a nice trade in here. Now it's blown through it. Okay, we got some strength in the trend behind it. take this grain of salt to Meta, same scenario, descending channel, broke its 50%, where can it go? Well, not entirely true yet. There's a range here. Let's put the top of that bar in focus. Ha, we wicked it. All right, kind of cool. So this is top down to bottom. That's the actual middle. The channel I traded was here to the previous support that it found on the way up. So that was my $100 bill target, right? So now we're kind of looking at a potential for either a breakdown from here to retrace and probably trade in a range between 106, 50 and 100 bucks. Horseshoes and hand grenades, guys. I can put exact numbers together on short-term charts, but long-term, there's a little gray area there. Anyway, I would almost like to see a little range here before we break out or break down, of course. And if we get out of that, we can certainly set targets up higher to every control in that trend. Sure, why not? I'm going to put one up here to 135.50, maybe. I don't know what the analyst price target is on that. I'll have to do a little more digging to find that number, but I usually print those in purple on my chart. I don't have one for AMD yet. I just haven't taken the time to look for it, but I'll get to it. Amazon is another one that's been just a glorious play for me, and I even spoke to a Mr. Tuttle about that one. He said there's better plays out there, but I beg to differ. Amazon was great. Opinions are, the adage. Looking at a really nice 2-for-1 setup on Amazon outside another descending channel. 136 target is pretty valid on that thing. I'm certainly bullish. I'm long here. I got long on the break. Very nice moves. Looking at this, very clean. We got a nice 50% retracement back to regression on that channel. Went through, made a 2-for-1. Or 1-for-1 and possibly setting up for a 2-for-1. However, we're looking at a tweezer top here on a daily, possible if today closes bearish. We could pull back and test this support again before we finish that move. So be a little leery at this point. I went ahead and converted some of my position into butterflies. I run these with debit spreads. I'll set up on it. I think I'm confident that it's at least going to flag here and give us a range so where we can make a quick decision if we need to on whether or not we're going to expect to pull back down to here or we're going to accept resume in this fairly parabolic trend. So kind of be aware of that. I do have a long target way up there. There's that 136 area, but the 2-for-1 would put us a little short of that, probably around the 127.75 zone. So I'll just leave the boxes drawn there. It's kind of a technique that's shared by some people as far as drawing these, but it's pretty rare to see people chart this way. So I'm a little bit different, let's just say that. But anyway, if you're at least mostly right, you trade profitably, and that's the name of the game, right? So trade the chart, draw it any way you want, use whatever analysis style that works for you. Don't go by any specific person's style of technical analysis, but it certainly works for me, and you're more than welcome to try it. Looking shorter term here, 2-hour chart. Yes, we can flag here and accumulate and then continue pressing on. It's very possible. Oh, geez, I just got to get this other screen off here. Hang on. There we go. So it certainly can accumulate here and continue on the break here, but we're going to wait and see. And I always tend to print a horizontal line at about the middle of these measured move boxes. So I can kind of say, all right, 120.50 area would be about the midpoint. We could stall there and certainly break out of a consolidation here, hit that, and then pull back for retracement. It can happen. Shorter term, this will be ending up in the day traders watch list pretty quick here with this sort of thing. They love trading range. I know I do. And I can predict range on the 1 and 5 minute chart very well and usually trade it very nicely. Again, it's the react, don't predict. Day trading can be a little different. Let's go into a couple others that we're looking at on CNBC over here. And I won't bother putting that screen over. You guys know what's there. Google was interesting. Let me get Google on. So Google, let me go out to the weekly here. Look at that. glorious box stack right there, right? We've got a target up here of like 134.80, 135 is in play. That would be about that 73.6 fib level or whatever the heck it is. I don't use fibs. I don't know those numbers. Effectively, get into the daily chart, and yes, we've made a very nice move, very similar to what we saw on Amazon. We got, you know, one leg here, a leg here. This should be over here, sorry. Effectively, we went parabolic here on this stretch, so we're now into the third box. We're ranging a little bit. We kind of almost touched the midpoint, and again, I'm going to draw that midpoint here. Only this one I'm going to put as a different color so I don't mix it up. Effectively, I'd like to see it accumulate here and finish this move, but again, it can reject here and pull back and test support of the previous high. So, you know, after a parabolic run like that, that's actually kind of the likely scenario. So certainly stay on top of watching Google. But this trade was more of a day trade today. You can see that big old wick on our daily candle that we haven't finished yet. It was a pretty easy move. I built a stack of boxes the other day and it didn't quite hit it, but if you drag it on, you know what? That was a pretty good 1-for-1, and it even extended out. So yeah, we pretty much hit a 2-for-1 on there. If you want me to copy the other box, I will. You know, when I draw these things, this is kind of how I do it. Oh, look, that wick stops right around there. How about that? 2-for-1. So measured moves are easy to trade for day traders, swing traders alike, and that's kind of my thing. So kind of keep an eye on Google here, because that wick usually represents, there's a whole bunch of liquidity here. So I could probably print a whole new liquidity zone off of that, and that would be a supply zone at this point because price is under it. So where's the demand zone? Well, the demand zone is going to be probably right in this area here, and I'm going to probably say it would stripe this little wick right here from yesterday's midday. So I'll draw a little box there and kind of presume if it can't hold that support area and it breaks through that, we could be in trouble for a pullback on Google, and certainly we can take a scalp to the bear side. We don't always have to be bulls, guys. Looking at, let's see, what was the other one we're looking at? AMD we already looked at. How about, do I look at Microsoft? Occasionally. Microsoft for me has been more of a just a long-term buy and hold situation. I haven't really drawn much dope on it because I don't tend to day trade that one. But look further to the left, kind of look familiar. Big old trend, cup and handle, and it's right at the first rim line, which I would call on a cup and handle is previous support from the top of that range on that breakout when it broke over. We're right there. Fine-tune that a little bit. We got a chance of resuming the full cup and handle. 331.65, of course, will be the line that we need to cross to continue a bull trend and have this be a legit cup and handle, which is a continuation pattern. It's a whole lot of time involved in that trend. This is certainly looking pretty strong. It has been. AI has been playing a big role in bringing Google into a just absolute rager of a trend. Just keep in mind, you know, measured moves still are valid here. We've got this leg here. We've basically made a 1-for-1 out of this whole range. We had that nice pullback. You know, we could take this as a 2-for-1 measured move. Sure, that's where this support line was. 3-fers are rare, but they do appear. Now we're at a key pivot though, so this is like the first rim line of our cup and handle pattern. So if we can't get through here, we can certainly pull back and test support somewhere in this area. We could even see it dip as low as 285.80, somewhere in that range. Use the horseshoe effect on that, or hand grenades if you prefer. I can certainly see that pulling back, or at least ranging here before we continue. And looking at what Kramer said is must we accept that there's a bubble in all of these? Well, we can accept that, but we don't have to trade on that bias. We can certainly just trade the chart that's in front of us, and that's kind of how we like it. A couple others we were looking at Foot Locker. We've got kind of the same scenario there. That's kind of played out. You can see I drew and traded the tar out of that one. Did very nice. Now we're back in the box, guys. This thing is just bearish as I'll get at. pretty nice stuff happens when you find these 50% retracements of channels, and when they reject, dude, they reject hardcore. We're back into this range here. Let me extend that line down. We have a pretty good shot at hitting the bottom down here all the way at like 28.50 on Foot Locker. This was one of Kramer's dolls for the club. You know, this was something that he was looking at buying and holding forever. That's just kind of one of his babies. You know, there's that whole SGEM ETF. There's a reason for it. I have noticed that their analysis over there at CNBC has improved a bit, instead of being, you know, the old adage that people would say, like, you know, just short everything Jim's bullish on and you make money. Well, it's kind of become a 50-50 shoot now, so be careful with that. They've stepped up their game a little bit, in my opinion, and they've been able to pull off, you know, a balance at least, so I like it. I always trade the chart in front of me, and those analysts, they tend to look more into fundamentals and stuff. And we had coined a phrase over there at the BP, and I thank Stone for this. He would call them fundamentals, and he got that from someone else, obviously. But I like that because it means a lot to me, because I'm a chart price action trader at my core. I almost always ignore fundamentals, so I just trade what's in front of me. And man, that was a pretty clean bearish rejection. Catching that momentum was glory. Now, we kind of hit the bottom. Well, we can print a doji and probably finish the move, or we can have a short-term, what I like to call the dead cat bounce. You know, certainly we had that attempt right on the open here. That's pretty much over and done with. Now we're breaking bearish. It may come up and test 30.45 for another entry at short and finish that move after all. So just kind of be alert on what you're being fed here. Look at the chart. It doesn't lie. Not calling anybody a liar, but you know. Let's see here. You go into another doll that they had, Alta. And it's funny because they were more looking into Estee Lauder, and I look at this industry as a different place. I like Alta better. Not because I'm like an investor in Alta, but because the price action is easier to read, and I love trading price action. Well, again, daily chart, big old 1-for-1 measured move. It even broke out above the previous high. I don't have the dope on this, but look, I do have a shaded area here. There's a reason for that. That is this 1-for-1. I don't have the box down here, but that was the target, and it failed. So we got bearish moves now happening. And guess what? You know, if I draw that midpoint in my box, we're right about there. If it can't hold this level, and it certainly is a retracement back to this previous leg here, you got the second leg there. If it fails this, expect this move to come back to original support. We could see 380 out of this. Be a little nimble, because this is going to be more of a trader's action zone than anything. We're going to see a lot of transactions happen here, I think. And this, if you trade it bar for bar, we got the bar. The doji and another bar is about the same height, right to that midpoint. So we could see a good trade come out of this going into the next couple of weeks, whether it'll be bullish or bearish. Good trades are good trades. So again, you have another measured move to see here. Anytime you see a trend and then some accumulation, that is the resting point from one leg to the next. Okay, we got 1-for-1 out of this. We're coming back to that support level. All three ways it points to, we're at a critical level where it could go either way. It could go bearish and retrace all this, or it could go bullish and go back to the top of the box. Decide when it tells you to. For now, we had a really bearish opening. That thing just tipped over and ran right to that line pretty methodically. That was almost a to the number play. I sometimes get proud when I call those out, when I say, hey man, SPY's going to go to exactly this number, and it nails it to the penny. I almost break my arm, pat myself on the back. This is another one of those. That's why I like I like Alta better than Estee Lauder for trading, because the price action is just better. But let's look at Estee Lauder anyway. Oh my gosh, my screen went red. Estee Lauder was a clean bearish measured move, guys. Let me see if I can slide this over. I have it locked. No, I don't. We're looking at a very nice 1-for-1 up. And then we got a break of support, 1-for-1 down. We made this box. I failed to leave the third box on, which would have been, I'll just draw it real fast for you. This guy here-ish. Again, take the horseshoe and hand grenade approach. This zone settled, didn't reach the top, rejected, cleaned down, gave us a setup for a 1-for-1 down. Done. Now we're at a key pivot area, 194.70. Where does that come from? Let's look way left. I've got a ton of dope on this screen because I've traded some of these levels. Although this is volatile as crap, it's a great day trader stock. I've loved this thing. Effectively, a lot of people were expecting this inverse head and shoulders to play off here, and of course it failed. A lot of bulls got trapped in here, and boom, they nailed it right down to the previous support level. We can finish that move all the way down to here, and if you look at my cursor horizontal line, it kind of lines up exactly there. We can be bears when we need to, and it's best to be an omnivore in the market and eat some bears, bulls, and pigs, whatever comes your way. The chart will tell you who to eat. So look for this to either have a support bounce here and retrace back to half this move, maybe even finish a whole move, or if it breaks this, we could go for another bear trade. Why not? Again, it's going to be a wait and see, and I think, unfortunately, the debt ceiling decision is going to have a lot of effect on the entire market, as we know. It's going to be interesting, but look at this. Gap down. My goodness, that's a day chart and a half, right? We set up a measured move, resting point, I like to call it. We made a clean dead cat bounce. We went right back to top of control and failed it, broke over today. Looking at the 2 hour, we can see the open went right up to that level, previous resistance from the previous opening high. And sure enough, we retraced half of it and printed a doji on the 2 hour. 5-minute chart. We could set up a double bottom here and come back and retrace back to about the 199.80 level. But again, I would expect to be a little biased on that. I might even take a short real quick on that and expect to resume 1-for-1 down to the bottom of the level. Might even happen as soon as today. We'll kind of play that by ear. I might keep that on my grid. I might not. I can only keep a certain amount of charts that I'll actually trade on my grid. I can't trade them all. So as fast as I may be, I got to have a space where I can focus, and that's the thing. I never trade more than 3 or 4 things at a time day trading. Not to say I don't swing trade on just many positions, but you know. Got some news on Morgan Stanley today. Looking at the CEO kind of said he's going to call it quits. Let's look at the chart. That's going to be interesting. I haven't even looked at that today to come to think of it. Oh, look at that. Bearish measured move done. Oh, cool. Let's get into some more dope. I have traded before. I hadn't looked at it today. But again, nice bullish 1-for-1 up here. Came down. There's your mid channel. We've retraced that. Hit that 50%er. Came back, tested the support. And now we're breaking over. And we could see, if you look left enough, this is that classic head and shoulders everybody loves to play short on. We can resume this entire trend right down to a point. Just be aware that there's an angular support here, and that comes from kind of our natural trend line. I split the difference and kind of walked a line way back to a root. And this is back to like 2016, guys. So looking at this, I can say, yes, that's a valid bear target for this whole setup. If this thing breaks over, you can plainly see that head and shoulders pattern now. If we resume that move, we could expect a target down here around 76.50. Short-ish term. This is a weekly chart, so each of these candles represents a week. Keep that in mind. But it crossed the red line, and I had that there for a reason. That was going to be critical support for this whole mess. Measured moves are easy to trade, but you got to be aware of what's on the long-term chart to set up your targets for. It'll probably react here. Certainly, we kind of crossed it twice with the little dead cat wiggle we had on the daily here, and certainly on the 2-hour chart, we've basically almost based that move from that low down here. If we get even lower, we could say that this is going to be a considerable range to watch, and this will be the new critical point of bears to cross, and this will now become the critical point for bulls to cross. So I'm going to change colors here. I expect accumulation here either way. It can bounce here. Maybe him stepping down is good news. Maybe it's not. But the chart tells me I could expect a good trade here soon, and that's what I'm going to do. So keep an eye on Morgan Stanley. That might be setting up for next week or so as well. go into a couple more as I have a little bit of time left here. How about Disney? Everybody loves looking at Disney. I know a couple of us got long on that last week, and I might be begging to differ if you look at my dope here. There's some big red boxes here. Let me zoom out first and show you what I'm looking at. That was the big diamond pattern, and just like SPY had that gap up where we get that sudden reversal out of nowhere, where it runs up to the top and kind of breaks over. Let me get my phone open here because I got to watch a trade on that, by the way. We're still in business. So anyway, when you see these diamonds, they precede, as I say, volatility, and sometimes they will fake a breakout one way and rip the other way. Well, the third box would sit right here at our previous low, and this is one of those diamonds that's a bit skewed. This was an earnings play for me, and I did pretty well with it, but looking here, we're at kind of a critical level in this area. We could see a reversal where it doesn't finish this move and it runs the other way, but just kind of be aware that this is still kind of an area where you're going to wait for the break. I always say don't trade the setup, trade the break, and this is kind of one of those times. Riding this long was certainly fruitful, but now we're kind of looking at some choppy range. We got that gap down from earnings. You can see they had a miss, and yeah, we just trade what's in front of us. But look, we made a nice clean 1-for-1, and the chances of breaking this are fairly high still. So if we break this, we could see a bearish move down here to like 84, 80, 85 bucks, somewhere in that neighborhood. If it holds this area, well, we can certainly go and get long back to a 50% retracement line. So I'll draw that with a segment here just to kind of be aware of it. More or less, I know where the boxes are, but I'll draw it out anyway. And just have this as a short-term bull target for retracement. So let's say we get into this and it bounces off this line. Okay, we could be bulls and ride that back, sure, to about $96 and some change. I'm going to wait and see. We could still finish this move. We've got a bar down with printing a spinner here on a 2-hour chart. Sometimes these will play into a Morningstar reversal. Sometimes they won't. And this looks like a bear flag to me, so I think we can resume this range down below. 1-for-1 would take us to a bear target of the day of $91. We'll see if we get there. Looking at a couple more, and then I got to get going because I know I want to make sure that whoever's on next has time. Salesforce has been kind of interesting here. CRM. I haven't charted this one. That just popped up on their watch list here. Let me see what they say here. Keep market perform hold rating seasonably weak but stable. Still has challenges, but Cohen likes CRM and so does the club. This is Cramer's words. In quarterly filings from Wall Street's biggest investors and money managers, we got an update on the activities in the stock. Salesforce reported a quarter end of the month, blah, blah, blah. Okay, then we got the earnings coming out on, the 31st there. Let's see if we can make a play. Hell, we'll just chart this thing live, why don't we? Well, let's draw some boxes here. I usually take these to about the median of consolidation. So if I see a range here, I'll split the difference between high and low with just kind of eyeball it. You don't have to be dead on. Throw a horseshoe at it. Let me draw the other side of this and drag it up here. Cool. Bullish 1-for-1's been met. Now what? Well, let's copy it. And we can say either A, we reject and resume back to the floor, or we go for a twofer. So certainly keep an eye on the earnings of this. We have a good range here. That might even end up being a good condor play. If it comes out on the 31st, I'd probably go into the expiration after June 16th on that for a condor. But I'm going to warn you on this one, they're probably going to be pretty expensive. So those spreads will be a little bit out of touch with what I like to call the pain zone. The expected limits of movement on the options chain, as many people would know, expected moves can sometimes point to areas of interest for the options market. But this particular equity, I know that I don't tend to trade it much with option spreads because they're pretty pricey. Even even the $5 wide spreads can be just a little bit out of range for my risk to reward appetite, but that's just my personal opinion. Doesn't mean there isn't a trade available here. So if you've got the capital to wield this, that premium is glorious, but it only equates to, I think, about 3% is what I checked on the last yield. With wheel trading, anything, I always look at the natural yield, which what I call the natural yield is I look at the monthly options and I will measure that percentage of what premium I could sell those for against how many dollars I'm going to put into that position to hold that. So if I'm selling covered calls, I'm going to weigh that percentage against my long position's cost. And if it's less than 4%, I don't even look at it. And this is one of those where it's kind of in that region of 3%ish. So it's like, damned if I do, damned if I don't for outlay. I can trade better, but usually I end up trading lower dollar equities to do so. So my risk to reward tolerances are different than many other people's risk to reward tolerances. And I love making zero cost moves, and I'm pretty close to there with OPEN. Current cost basis on that is just 9 cents a share with the premium I've earned. That's been a glorious wheel trade. That thing's trading around $2 though. So I mean, how many people are going to be longing that as an investor? Probably not many. That's the kind of thing I do, and that yield has been just kind of a natural 20% or better. And in this case, I've gotten way better than that because here I am on week 7, and I'm damn near at a zero cost, so not bad. As far as CRM goes, though, we do have a setup for a nice bull trade on that, but certainly be aware of the key resistance zone. And let's look further left to see what we've come up against here. Oh, how about that? A channel. Let me draw it. I'm going to do the extended lines here. So channels are kind of neat. You can kind of draw them anywhere. You can find key price points and just lay them out. Note that this does have a nice regression line in the middle, and it's met that and done things with it. You can see price reacts to it right here. It's a nice slope. Well, we're outside the channel. Retracement target, pretty simple to find. Split the channel right in the middle, and I bet it comes right to where we're at. Look at that. There's about half. Just eyeball it. You don't have to be dead on, but we know where the measured move is anyway, so pretty plain to see. You get these and you look left and you figure out where all your other previous control zones are. If you want, you could print 1,000 horizontal lines on your chart, but note one thing here, and this one thing is the important part. There's a gap there, guys. So if we break that, oh look, it's right at the top of our measured move. Many, many ways to get to the same results when it comes to price action trading. And when I can sit here in front of you and make it look easy. Trust me, once you get it, it really is easy. It's just finding what works for you and draw it out. Long story short, that would be a good bull target. So 250, 228, 250, 230. Pretty reasonable play on that for the bulls. The bears would probably see that come back to, maybe finding a pullback to like 170-ish, right in the neighborhood there. And look left. That's a key level, okay? There's nice 1-for-1 here. That's the trend start for the second leg. It's come down. There's accumulation there. There's accumulation there. It's a significant level. So we know that kind of splits our bullish 1-for-1. And if it fails to get through this line, we can certainly retrace that back. So kind of keep that in mind. We'll make that a red move for the bull target or bear target. All right. Got time for one more, maybe? Yeah, let's see. I'm not even going to look at that Bush Health. Health stocks do not really stand out to me lately. If anything, I would be looking at indexes for health at the moment, but there have been some pretty killer ones. BIOC was a great penny stock trade this morning. That thing ran up 80%, halted pretty quickly. Nice trades there to be had in the healthcare and biotech industry, but just kind of be aware that that tends to be volatile, and I'm a bit standoffish on it for now. I do want to look at Home Depot, though. Let's have a look at that real quick. I haven't even put any dope on that, I don't think, in a while. Let's see here. Weekly, hey, we've made nice measured moves. Here we go, 1-for-1, 2-for-1, that's done. We kind of came back to a median zone here. Let's print a area of interest here. About 274.14. Let me drill down the daily. All right, so here's your descending channel, and there was a 50% retracement to be had here. We've done it again. Now we've rejected. Earnings was a bit of a miss, I know. That doesn't necessarily mean bad things. I mean, when you hit the bottom, there's one way to go, is up. That is a key level it hit pretty readily. We could say that we might have a good trade setting up for us. Let's go and drill this down to a 2-hour and see if we can find some reason to our madness here. All right, pretty impressive demand zone here. There's a nice big bull bar that laid right up for a 1-for-1, pretty clean. Now we've rejected, pulled back. We could have a bull trade here. Let's see. Bulls would target this at previous high 296.60. We could extend that a little bit. Can't really draw boxes on this one though. It's not the greatest. I'd like to see a nice play up to about the 50% retracement, or we could possibly print a Morningstar. Keep an eye on this one. This could give us a good setup for going into the next couple weeks. We tested that support area, ran right on up. Now we're back into retracement from here. I could say short term, day traders could see about 292.40 for a quick bull target out of this sweep. Let's drill down a little bit better. Yeah, that's a good target. Right in there. Looking at just basic 50% retracement from the downward channel we opened with. That could play out. I kind of like it. We could even get into going into range at 293.40. Might even go back to the high and resume that. That's a good play. Day trades are welcome on this one. Long term, I want to wait and see what this setup does to us. I think we could have a good play here later on. If things go right with the debt ceiling situation, we could see that just kind of reverse. I don't trade Home Depot much, but there's certainly something to be looked at here. It was at least worth looking. Here's your 5-minute chart. Pretty simple double bottom play. It's broke resistance 1, target 1 from that short term. Let's say about 291.90. And if we can resume, keep riding it till it dies. Yeah, bulls are taking it. Good stuff. All right, guys, well, I'm going to wrap with that. We've pretty much taken up all of 53 minutes here, and I know someone comes on at 1. I don't know who. I haven't looked at the schedule, but I'll see you guys around. Thanks for joining me, and have a great weekend, everybody. Be safe out there. And I think next week we're going to see some excitement outside of this situation, and maybe in the next coming weeks we'll have some really great plays. And, of course, I'll keep everybody apprised of what I'm looking at. Have a great one, guys.